Hey guys, this is part 2, and in part 2 we're going to be going over identifying the engulfing candle and how to look for a good trade opportunity with the engulfing candle.
This is part 2 of the engulfing trader. In this part we'll be going over identifying the signal. Okay, so let's begin. In part 1 we went over how to identify structure, right? How to identify support and resistance, how to draw it on the chart, and how to know that these are high probability trading zones. So in this part, we'll be going over just focusing on how to identify the signal. Right. Every candle on a Forex chart, any chart, mind you, is telling a story. The engulfing candles is a little bit different though. The engulfing candle is like basically saying, look at me, look at me. For an up candle, like say this one here, let me zoom in. For a bullish engulfing candle, such as this one right here on the Euro US, it's saying it's yelling at you saying there are more buyers in the market. Not only that, it's breaking the high of the previous candles, as you can see like that, right? So when you look at an engulfing candle, it's a candle that doesn't need any confluences to be right, and it's different to all other candles. Even a pin bar generally needs a confluence, meaning it needs a structure or something to play off. In the engulfing trader series, however, we focus on taking these signals at structure. The reason being is it's a double whammy. It's a double confluence. That price is most likely going to be right in our favor. Here's another example of a bearish engulfing at resistance structure, and the price went down. Bullish engulfing candle, and the price went up. Right at structure. Sold off right at structure here. Over here, as you can see, we've got another bearish engulfing candle. So these are the signals, guys. In part 3, I'm going to show you how to trade them. Right? I'm going to give you a quick rundown right now, though, before we get into part 3. Just let me identify a couple more signals. Right, so here's a bearish engulfing, and then the price went down. Now let me go back over to this one. Okay, this is a great bearish engulfing candle. Let me mark it in. This would be your entry, about 9 pips after the candle, entry candle. This would be your stop above the high. And a lot of people ask me, why would the stop be here? Well, the stop would be there because that's where you'd be wrong. Every trade is different. There's no such thing as a set stop loss. And I mean, if you do use that with any strategy, you're going to get, that's a completely different strategy. And I don't recommend that. In order to be proven wrong, price needs to break above the high of this candle. Yeah? Where you take profit? Well, I have 2 methods of taking profit in trading. One is I open up 2 positions. I take 1 to 1 to 1 to the risk. And the other one I take and let run until I get an opposing candle to tell me to get out. An opposing signal candle. But I'll go over that in part 3 in the money management side. I also use a break-even feature. That's up to you if you want to use that. I will give you 2 options that work really well. in part 3. In this part, however, we're just going to focus on identifying the signal. Okay, so this is the third signal identified, and as you can see, price went down. We also got, this is actually support structure here, and this was not a bullish engulfing, but we had a bullish engulfing straight after it, making this what I refer to as a double bounce bullish engulfing. Well, it's basically a double candle engulfing. One smaller candle or a two-step engulfing. You can call it whatever you like. And these work a lot. Right? So I'll just give you another example of entry. You would enter after the candle. Now if you're wondering how much, I'll go over that in part 3. I like to use 9 pips. Right? And your stop goes below the low on that trade. Or if you want to use a tighter stop, you can put it below the candle. Each stop is valid. Okay? We'll go over that in detail in part 3, like I said. Alright, let's go on to the next pair. This is the GBP New Zealand Daily. Alright, as I showed you guys in part 1. Here's the structure points that we identified. So let me zoom in. Alright, so this, see this bearish candle here? This is a bearish engulfing at resistance. Identified resistance, identified resistance. Price went down here. Then, in future, what did it do again? It went down again. And here's the signal to tell you that the bears are getting in strong. Yeah? And if you'd taken this signal, which is completely fine, but if you look left, you can see that it sees, if you look left, you can see that it sees the bullish engulfing. So that's why we filter out these signals. Here, not so much. We've had all these candles in between. This one broke the low, and you can't really see this candle because there's so many candles in between. If you did take this trade, that's okay. Your stop still would have been above this pin bar in order to be wrong, and the market ebbed along sideways and finally came down. They're both valid signals. Just this one's a better one. Down here, we had a nice support structure, which was formed, well, I'd have to zoom out. Just give me a second. Yeah, as you can see, nice support structure, boom and boom. So when price came back here, what did we expect? We expected that it could act as support again. And this is one thing you guys got to remember, that, you know, in Forex, history repeats itself over and over and over again. Traders are predictable. If you're wanting to take really, really high probability trades, you've got to look where traders are taking really, really high probability trades. And that's these daily structure points. Now, it doesn't matter what time frame you trade this on. These structure points are your high probability trading zones. Whether you're trading trend trading or you're trading counter trend trading, or you're just trading based off the candles alone at these structures. So let's have a look at this. Now that we know that this was a support structure in the past, multiple times, it's not a mystery. We know that this could be another support zone again. This is what I call an almost engulfing candle. And they're still fine. All you have to do is enter above the previous candle. A few pips, about 9 pips above the previous candle open, which is this candle here. So you enter a buy trade here. and the price went up. Right? Identify the structure, identify the signal, and then you can take the trade. It's a process. Here's another signal here. It's a little bit wicky, but that's okay. You enter after the candle, right? Place the stop below the low. Or if you want to give it even a little bit more space, you can place it below the previous low. Both places are valid places to place stops. Alright. So here's another bearish engulfing. Here's another pin bar engulfing, but it's just not big enough to the previous candle. However, you can enter just after that signal, like I showed you in similar this. It's very close. Alright? Which makes it an engulfing. You can enter after this candle too. Alright, let's go on to the next pair. The next pair is the GBP US daily chart. Alright, so we got a sell. Let me zoom in. Actually, let me zoom out so we can see the structure in detail, just to show you what I'm talking about. As you can see, this has been a support and a resistance zone many times in the past. Okay, many times. So when history gets back to these points in the future, I mean, it could be years later, sometimes they are respected again and again. It's as simple as that. So when people ask me, how long can support and resistance be valid? It can be valid for over years and years and years. So let's have a look at this one. We got a bearish engulfing here, and price went down. We came back to that spot again later on. We got a bearish engulfing here, and price went down. Right. We also know that this area here, as you can see here, look left, was a major support zone. So when price came back here, could give a really good bullish engulfing bit of price action. And here you go, here's a signal. The signal we're looking for. Bullish engulfing, price goes up. Right? Bearish engulfing, price goes down. Structure, bearish engulfing, price goes down. Let's move on to the next pair. Okay, we had sort of a double bottom sort of effect happening down here. We did not know this was going to be a major support. Okay, we didn't have any support zones here, so we're waiting. We did get a nice bounce here, giving us the evidence. Price came back down from there. Then we got a nice bounce from here again. Right? Price broke up above structure. Right? And this could have ended up being a good sell position. As you can see, we had a nice bearish engulfing here. This was a false signal. Price went down a bit, bounced back up. And they happen sometimes. Up here, didn't get a nice bearish engulfing. The price went back down. This is where we would have expected a buy play to happen. Based off structure. Previous resistance becomes next time support. And the price went up. Okay, let's move on to the next pair. And this area here could be a next buy zone on this pair. As you can see, we've got a bearish engulfing. Price went down. Alright. US Swiss daily. Right, so let's have a look at this. Begin with. This is a structure point that you guys would have remembered from part 1. Right? we also had another structure point up here, right? We knew this was a zone to start looking for sell signals, right? And it was identified from here. It was also identified in the past. If you want to draw in your chart, you know, these places have been used for years. So let's mark it in. We've got a bearish engulfing. Did the price go down? Yes, it did. This is also a support zone for many years. Ooh. Just zoom out so you can see that. See what I'm talking about? See here, here, and here. We'll pull that up a little bit so you guys can see in detail. Here, 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 resistance, 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 resistance becomes support. Let's zoom back in. So we knew that if price bounced here, that this would be a good buy opportunity. We got an engulfing candle right here. So look at this. Did price go up after this candle? Yes, it did. Right? And history repeats itself over and over and over again. We came back to here again. Price went back up. Got an engulfing candle. Price went back up. Okay, let's move on to the next pair. Next pair is the Euro AED. Had a double top here. Had a nice bearish engulfing. And then price went down. Right? We also had confirmed this as support because it was previous resistance. So we thought if we get a nice bullish engulfing here, which we did, we got two, the price would go up. Did it? It did. Went up. Right? Then we knew that this previous support, once it was broken, broke below, price came back up here, that it would act as most likely resistance. So we wait for an engulfing candle here, which we got. We got a couple of them. And then price went down. Engulfing candle, price went down. Right? Gold. So look at this. This was a previous support structure, right? So we knew that when price came back down to here, we could get support, right? This is not an engulfing, yeah? Close. This is an engulfing, yeah? Engulfs all these previous candles. We also had a really strong pin bar before that, which is a nice pattern, pin bar, engulfing. And after this engulfing candle, what did the price do? Price went up. Yeah? This was previously a resistance in the past, right? Here, came up and tested it, fell down. So we knew that we got a good candle up here. The price, this could be a good resistance zone. Place a stop above the pin bar. And we got a nice little engulfing, and price went down. Right? We also retested this. So this was a support zone, previous support zone, broke below, came back and tested it as resistance. Got a bearish engulfing, and then what happened? Price went down. And the market just keeps doing this over and over and over again. Let's move on to the next pair. Okay. This is the GBP AUD daily. Right? Okay, so identified resistance. Okay. Next time we get there, what do we get? Bearish engulfing. What happened after this bearish engulfing? Price went down. Right. We also identified a support zone just here. Do we get any bullish engulfings? No, we didn't. So what do? Just stay out of the market. You just wait. Alright? Waiting for a signal. So let's move on to the next pair. So you're just waiting for price to get to these structure points, waiting for a good engulfing, depending on what time frame you're trading, and then you take the trade. I recommend the daily charts and the weekly charts because the probability is extremely high. Right? And they work over and over and over again. Also, as another benefit, you only have to check the charts once a day. Or, in the weekly perspective, you only have to check it once a week. Very easy, guys. Alright, so this was identified support zone. As you can see if I zoom out. Right, support, 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 resistance. Well, I can pull that down a little bit. Like that. Resistance, support, support, support. Okay? So it's a support zone. So we know around here, around this area, as you know it's a zone, this is where we'll be looking for bullish price action. Price is coming back down to it. Yeah? Did we get some bullish price action? Yes, we did. Did price go up afterwards? Yes, it did. We got a nice pin bar right here, engulfing style candle. Not bigger than the previous candle, but close enough. Enter, as you remember before, enter after the candle, previous candle. And did the price go up? Yes, it did. Okay. This is also an interesting one. They call it a belt. This is a bearish engulfing belt. This is fine. The market went down. You enter a trade afterwards. So here's an example of a bearish engulfing at resistance where you would have been chopped out. Okay? Trading is a process. Some trades are going to be losers, some trades are going to be winners. So this would have been a losing trade. Yeah? As you can see, the majority of the trades will be winners. And the rewards are exceptional. Yeah? And so, eventually, it turned over. And you could have entered on this candle, because we had a nice engulfing candle that broke the lows. And then what happened? The market went down. Recovered your loss. Just stick to the process. Right? Then down here, right, previous support area, bounce. We didn't know it was going to bounce here, right? Not this time. It came up here, used the support as resistance, and around here gave a really good signal. We place our stop above the pin bar. And then what happened? The market slowly ebbed lower. And then eventually it broke lower. Now here, because of the evidence, we knew that if we came back here, we got a nice bullish engulfing, that the market would probably give a nice uptrend, up move. And did we get one? Yep. Got a bullish engulfing here, and price went up. Okay, let's move on to the next pair. Okay, this is the New Zealand US daily. And we recently had a move on this pair. This is a major resistance. It's been there for years. Alright, or support if it's above it. Right? If it goes up above and then comes back down to it, it was a major support. Of it, it found weakness at this resistance. And then look at this. Bearish engulfing. What happened after it? Price went down. Right? This was also a resistance down here. Right? Price Price came down, price went up. We got a resistance right here. We got an engulfing right here, right? And then what happened? Price went down. Right? Identify the support, identify the structure, look for the signal, take the trade. Alright, part 3 we'll go over how to enter the trade. I gave you guys a quick rundown just before. Where to lock in, where to consider locking in break even, and where to consider taking off all your profits. How to let your trade run, one of your trades run. Like I said, you enter 2 trades in order to get the biggest benefit. If it comes back and hits your break even on the second trade, so be it. Right? Following process. And that's what's going to build your account. As the last example, we'll go over to the Euro AUD, and this is the Euro AUD weekly. Just wanted to give you an example of extreme moves. Previous support, right? Price broke below, price came back up, gave a nice bearish engulfing, right here. Broke the previous low of the candle. As you can see, this body is bigger than this body, and that's what makes it engulfing. And the price went down. Now, if you're following my strategy, the first trade you would have gotten out at a 1-to-1. The second trade, however, you would have let it run until you got an opposing candle telling you to get out, which is exactly here. It's a 960 pip trade. Not bad, yeah? Not to mention, straight afterwards, bullish engulfing, price went up. Right? Very simple. No indicators. Just structure and the candle and what the candle is telling us. Okay, that's it for part 2, identifying the signal. You guys now should be familiar with looking at the structure, finding and identifying structure, and identifying these candles at the structure. Okay, thanks for watching.